Hello everyone, I'm Janne Muta, Chief Market Analyst for TO Markets, and it is my pleasure to spend some time with you looking at the markets, learning how to do analysis. Maybe you can learn something here, something that will move you forward in your learning curve. Maybe you can more quickly move forward in your trading just by attending these webinars. That's what I'm here for. That's what I believe I can contribute to you. I've been in the markets, analyzing and trading the markets over 20 years now, so I have seen lots of ups and downs and lots of price charts and priced sort of market action, price behavior. So I'm able to hopefully contribute something really valuable to you today. Okay, live market analysis, and we're going to find hopefully some trading opportunities today, but mainly I'm trying to give you an idea what to look for in the markets. Obviously, none of this is investment advice. We only provide you with marketing material, and this is for educational purposes. That's what this is for, so that you can learn, you can become a better trader. Like I said, I've been in the markets over 20 years. And my background is here. I really don't want to spend too much time on it. You can read it there. But in my current role, I'm providing you with analysis and trade ideas. So just go to TO Markets and analysis page, type in the URL /analysis, and you get to my analysis. I write every day, and you get to see what I'm thinking about the markets. And lately, we've been quite successful, actually. I'm just very quickly going to give you some examples of recent analysis, recent trade ideas working out. So obviously, you have the question, why should you be listening to me? And here's the answer. Because over these 20 plus years, I've picked up a couple of things, and I'm going to, in the future, keep on providing you with trade ideas. And here's something. Here's just a few markets that over the last week have hit my target levels. There was US oil hitting my target 1, and then the price traded lower. There was natural gas hitting my target 1, and then selling started right below my T2 level or target 2 level, and then later on the market just rocketed higher. There was DAX trade. DAX was hitting targets 1 and 2. This was a short trade idea, and gold hit my target after breaking out of this kind of bearish channel here. Then we got a rally, so the price dipped a bit and then rallied higher, hit my T1 level there at 1940. And just lately, this was a couple of days ago, I was pointing out pound USD strength, saying that the market has moved to my T1, and if it moves decidedly above that resistance level there, we should expect it to move to 3280, which it did. The market rallied to 3280. So that was a really, really nice trade idea. It worked nicely as a trade. So I'm presenting these to you not as something that you can copy as a black box. I would always recommend that you never copy somebody else's trades, because then it makes you you become dependent on the other person. It's not a good position to be in. But I'm presenting this to you so that you can learn, so that you can see where the market might be going, and then bit by bit your own analysis skills get better. And then once you do say that you analyze the market and you see my analysis, and if you agree based on your own considerations and based on your own analysis, if you agree with my trade idea, then obviously go ahead and trade it. But don't ever trade somebody else's signals or trade ideas as a black box. Kind of way, or in a black box kind of way. It's not healthy. It basically means that you never learn anything. It just means that you become dependent on the other person. So in this webinar, we're going to cover the markets and use these technical tools. We use support and resistance levels, moving averages, oscillators, trends, wedges, and double bottoms. I'm not going to go into these because this webinar isn't about the technicalities about related to these tools, but I'm just basically giving you some my views on the market using these tools. Okay, so we're ready to go to the charts and to the markets as they are at the moment. And if you have any questions, please feel free to ask the questions and let me know what you would like me to maybe focus more on, or if you have something that is not exactly related to the chart, don't worry about it. Ask the questions. I would love to help you guys, as I've said quite a few times already. But here we go. So I'm going to bring up the charts. Give me a moment. I'm thinking we're going to start with CAD-YAN. And I'm going to, by the way, I'm going to concentrate on the markets that I have analyzed lately, because I'm very familiar with those and I probably can give you better ideas and better guidance using these markets than something else. That said, if you have a market that you are really interested in and I don't cover it here, please let me know. In the chat box, you can type in the market you're interested in and maybe the question you have related to the market. So let's look at CAD-YAN first. And here are the charts. There we go. So, what's going on with this market? We basically, first of all, I tend to have the same chart setup for all the charts I use. I use 20 period and 50 period moving averages just to give an idea on the trend, and then I have stochastics 5, 3, and 3 to give me an idea of oversold and overbought conditions. Now, when the market is trending higher, or when a market is trending higher, obviously there can be periods when the market just, it goes to overbought area, but the price still keeps on going higher. That's very typical in an uptrending market. So the idea that you sell the overbought areas or overbought markets is rubbish when we deal with rising markets in uptrending markets. It just doesn't work. The idea where you buy the oversold, like here, and you at the same time you keep on selling the overbought areas, that is for sideways markets. Like we have here, a short period of sideways movement. That's where you can use this idea. But in rising markets, you should ignore the overbought signals in oscillators, and you should concentrate more on looking for oversold conditions. So basically, when the market is moving higher, we want to be buyers. When the market is moving lower, we want to be sellers. And when the market is moving sideways, we want to buy support and sell the resistance. So that's basically what is my approach. I don't want to give you some fancy, complicated, difficult ideas, because that's not how the markets work. Markets work very simply. They go up when you have higher lows and higher highs. They go down when you have lower highs and lower lows. Let me see if we have an example here. Okay, here we have a lower low and then the market goes down. But this is in the context of bigger uptrend moves, so that doesn't last long. But that's basically how the market works. When you have more demand than supply, that's when the prices go higher. When the supply exceeds the demand, the prices go down. And what we do with the chart analysis, we just try to figure out what is happening at the moment. Okay, there are also fundamental factors, and Katjan is a beautiful example of fundamental analysis. I wrote about this somewhere down here, I think it was last week, that this market is going higher. It's basically, it had been going higher for quite some time, and it's basically, the reason was that we have high inflation and we have oil price. There is upward pressure in the oil price because of the war in Ukraine, and because US has already banned buying the Russian oil, and EU member countries are considering doing the same. So there is upward price pressure in oil. And at the same time, we have Japanese government saying, no, we're not going to cut our QE. We want to keep the extraordinarily accommodative monetary policy. That's what we're going to keep in place. So that creates an environment where Canadian currency, CAD, is supported by the oil and the commodity rally. And at the same time, Japanese yen is under pressure because of the monetary policy in the country. So that creates a kind of setup where it's very difficult to say when this uptrend is going to stop. Therefore, it's better to look for buy opportunities than to look for a spot where the market might just reverse and move down again. You know the reason why most retail traders lose money? Can somebody tell me? Can you guys tell me why most retail traders lose money? Meanwhile, I'm going to do some basic analysis here. Let me know if you have an idea why most retail traders lose money. Let me know. I know there's a little bit of delay, so I'm going to give you some time to write your answers. And while you do that, I'm going to show you what I'm seeing in this chart. So basically, technically we have, greed and fear, but there's something else. You're right, but I'm looking for something else. Thank you, Fire. A very good answer, though. It's greed and fear that make people to do some things that are not very clever. And one of those things, let's see if anybody can find what I'm after. But first of all, what's going on in this chart? We have a series of higher lows. There is a higher low there. The next higher low is here. Then we have a potential equal low here, roughly equal. So when the market is doing this, there is lots of momentum, and you can understand that people are eager to move the market higher. But when you see that the market starts to move sideways, then you have to conclude that people aren't as quick to jump in again on the buy side. They are a little bit more cautious on this market. Keketso is saying that personally I lose because I lack patience and I never follow my setups when I have opened a position. You know, I have in the past, I have struggled with the same issue. I put a trade on and then oh no, it's not gonna work, I'm gonna take this off. And yeah, that's not the way to do it. My advice to you, Keketso, is that you should trade smaller, because probably the reason why you're not keeping your setups or following your setups is that you have too much fear of losing. You have to trade so small that the fear of losing just disappears. So trade smaller and decide where you are going to buy and decide where your stop level is, and then based on that distance between your buy level and your stop price level, then you decide how much you're going to risk in that trade. Whether it's $100, $50, $500, I don't know your account size, so I'm just saying, decide beforehand how much you can lose. And once you know, okay, this is a level, I'm happy to lose $100. It doesn't impact me, so I'm keeping this trade because I believe the market might move 3 times higher. It might move 3 times so that I get and I win 3 times the money I risk. John is saying, predicting the end of a trend, entering early and catching a falling knife. John, that's exactly what I was after. Most retail traders, they sell a market like this. They sell it here. They sell it here. They short and short and short. And, you know, that's the way to lose money. Eventually these people, excuse me, eventually these people, they are right. But by the time the market gets to that point where it turns, they have lost so much money that the little that they make in the reversal doesn't make any difference. But you know what the professionals do? You know, this market move is not possible without the professional money. What do they do? Professionals buy, they buy, and they buy. And they have been buying here, and they have been buying here and here. You know, eventually they'll be wrong. And they lose a little bit of money. But it's so little that it doesn't make any difference. See, it's totally the opposite of what the retail traders do. Professionals make money all the way up here. Say they make, for an argument's sake, they make X amount of money. And when the market moves against them, they lose probably 0.04 times X. So they kind of lose 4% of what they made over this up run here. And that's something that we have to keep in mind. Try to stay on the right side of the market. Try to do what the professionals do, and you are much better equipped to make money in the markets. And of course there'll be times when you are buying too early. So you think that there's a support, you want to buy there. I'm going to use this as an example. Let me just try to move this here. Yeah. So there's support, you identify the support, and the market comes down to this level. If your stop is too close, you're going to be stopped out before the market has a chance to move higher. So if you do that, you have to have the stop a little bit wider. Maybe your stop level should be somewhere down here. And you just decrease your position size to keep yourself in the trade. Anyway, let's move on. So these are basically the principles that I try to follow. You know, there's more to it, but these are probably the most important ones that I can think of right at the moment. And basically, when the market is moving higher, we should try to understand. First of all, let's go to fundamentals. If you have a market like a CAD yen here with huge fundamental drivers behind it, it's probably not so wise to pay a lot of attention to potential signs of market turning lower. When it turns lower, you will see it. The moving average 20 period will cross below the 50, and then you have a bigger correction there. But often in a market like this, even the bigger corrections are purchased at some stage. So we just have to be aware of where those corrections might end. And I'm seeing here was a resistance, so it's now likely to be a support. And if we look at this, we can see that yes, there is a bigger trend. So, you know, market analysis is often about scenarios, creating scenarios. A lot of time you're just doing analysis without getting results, so to speak, because you try to understand what might happen. And here we could do scenario analysis like this. We could say that, okay, there is an uptrend, a trend line that meets this low here. So if the market trades down here, I think there's a good chance the buyers will appear because they see two technical factors here. One is this low here, and another one is the moving average. Again, I don't know if the market's going to go there, but it's possible. It's a scenario that I have to be ready for. Another possibility is that the market keeps on fluctuating around this support and then it turns higher, so I have to be ready for that. So if the market just bounces higher from here, let me make this a little bit bigger. We have a lower high, so that is a reason for, reason to question a little bit of what's going on here. Maybe the market is taking a breather. Maybe the market moves into a sideways period like here, or another sideways period that we had here, and there was that little correction too. We have to be prepared for that scenario also. We might not trade it, but we have to think it through. Then, if the market bounces higher from here, and if it rallies above this, then where's the next resistance? Obviously, it's going to be that upper end of this channel, and it's going to be this high here. But markets have a tendency in uptrend to keep on breaking resistance levels. So we have to accept the fact that we can't know where the market is going. We can't have more than these scenarios that might or might not play out. And that's why you have risk management in your sort of toolbox. You don't risk more than you are looking to make. That's a simple fact. Just try to keep your potential reward bigger than the money you risk. Okay, so excuse me. If the market doesn't move above this level, then it's more likely to keep on moving lower and maybe breaking this low here. Let's see if we have any technical factors that come together with those levels. I'm going to use Fibonacci. Sorry. I'm losing my voice. Okay, so I'm using Fibonacci sometimes to kind of see what other people might be looking at. And here we have, from this low to this high, an interesting phenomenon taking place. We have basically this low here coinciding with 23.6 retracement level, and we have this channel low here. Okay, that channel low should be probably lower because otherwise it's just okay. I think it should be that high, this high, and this low. So the channel low is now lower, but we have a potential support there. We have 23.6 Fibonacci retracement. So if the market can't make it above that high, the high of 96.19, then it's probably going to move a little lower first. And the next potential area that we have is here. That low is 95.78 and we have 38.2 Fibonacci retracement level, roughly coinciding with the level. And then we have a very important level here. The low of this candle is 95.41, and that's why we roughly have 50% Fibonacci retracement level. And it also coincides with that rising trend line. So I would say that somewhere around here, if the market moves down here, there's a big likelihood that the markets, that traders will consider this as a buy level, basically because we have people here looking at this low. Some people look at this low, some people look at the 50% Fibonacci retracement, and some people look at this trend line. So lots of different people probably looking at this as a potential buy area. Does it mean that the market will move there and then rally into new highs from there? That it's just the market comes down here and then does this? Obviously we don't know. But that's one of those facts that we have to live with. We just have to treat that as a possibility and be prepared for it. But that's what the trading is about. There's just no way around it. If market now keeps on moving higher from the current level, the other scenario obviously is that this high is broken, then there's a bigger likelihood that the next high is broken also. So market might move to it, but as long as it is staying above 96.19, there is strength in the market and it's more likely to break the next resistance and the next resistance too, and keep on trending higher. So that's how you try to figure out what's happening with the market. And I know that there's a lot to take in and it requires a lot of learning from your part as well. And nothing is actually going to replace the value of experience. You just have to sit down every day, do your analysis, and little by little you become better in this business. All right, let's move forward. Okay, let's look at oil, because we were talking about oil here. Let's see what's happening with oil at the moment. So it's always good to pay some attention to what's been happening before. And basically we do have down here a kind of base. Market created a base from which it ran higher. So this consolidation down here is a base that was used to run the market higher. So big institutions were basically accumulating their positions here. Then some profit taking occurred, and then the market ran higher again, and then profit taking pushed the market down. But now it's kind of, the market is a little bit hesitant. It's not as strong as it was here, but it is kind of, there's a tug of war going between people who are bearish and people who are bullish. Let me just, okay, here we go. So I'm basically seeing a kind of triangle formation developing here. And oops, let me do that again. So here it is. Formations are interesting. They often give an idea. If you take the widest bit of the formation after the first 2 points, like here, if you take the widest bit and use that width of the formation to create a projection, that's where the market, based on this technical formation, is likely to head to. Now we have to pay attention to this level here. So what I like about this now, it's basically the high has been 111.09. What I like about this here is that it was creating higher lows, and now it has pushed itself above the resistance at 110.65. And so it's possible that this is going to be another kind of mid, how should I say this? It's possible that this is going to be another base from which the market runs higher, but the probability is difficult to say the likelihood or the probability, what the probability might be. But what I can say with confidence is that if the market stays above this high, that 110.65 high, it's quite likely to move to this level and test it. So that could be your trade target, and then if you see the market moving higher, then maybe it moves all the way up to this. So I'm thinking, my gut feeling is that I'm gonna have my T1 here just below the resistance, and then the the second target here, T2. So 112.30 or so, 35, and 114 roughly where I think this market could go. But the condition is that it has to stay above this 110.65. If it starts to move lower, the probability of this support breaking actually grows, and then we might see, let's see, where this market could move on the downside. So yeah, roughly, if the breakout point was there, then it would be roughly down here. So that's obviously something we have to keep in mind, although I know that we have lots of upside price pressure on oil, so I'm not that worried about the downside. It's as long as the market keeps on making higher lows and breaking resistances, we have evidence that the market is going higher. So I'm not really looking to short this market. I'm looking for long trade opportunities, but because we don't provide investment advice, that's why it is very important that we also give you the alternative scenario. And sometimes, I don't know the future, so sometimes it happens that the alternative scenario works out. So that's something that we need to bear in mind. So that's oil. Any questions on oil? Okay, Kagetsu is saying, can we take a look at gold? Sure, let's do that. We stay with this commodity theme. Let's go to XAU USD. Okay, gold is rallying nicely higher. So let's see what might happen next. First of all, gold hit my target. What I love about markets is that when you trade, you learn that you basically have, it's like a story. When the market hits certain levels, you kind of get a better feel of how the market is likely to move in the future. Obviously, you can't tell all the time where the market's going, but if you wait for good opportunities, then you find good trades. So first of all, here we had one reactionary high and the second. This is where the market hit my target level, 1940. That was my target one level. So now we have gold approaching very interesting levels, because it might be that the bulls get challenged here. Obviously, I don't know what's going to happen. I'm just saying that we have one technical factor here. But I don't actually ever, I never ever base my analysis or trade on one technical factor only. I need to see more. And here we have, I think that is really the high that we need to focus on. So, market created a higher low here, higher low there, and then it moved above this resistance. And now it's approaching the next potential resistance area here. Let's see if we have any Fibonacci levels that go inside with this. Actually, 61.8. That's pretty close. So that might be something that traders focus on. Although I'm considering gold a little, I find it difficult to short here. I like gold here more on the long side in general. I mean, all of this price action here. Obviously, there are opportunities on the short side, but when you have market coming down here, creating higher lows and then shooting higher, then you have to ask the question how far it might go. Could it actually now go beyond this? Maybe we have enough here to again move gold lower. I don't know. Nobody knows. I think it's something that we need to pay attention to in kind of together with stocks. Let me take a look at DAX. And in the daily time frame, DAX is fairly close to this huge support level here. So there is the chance that at some stage traders just find it a little too hard to believe that the market can push higher, and then stocks come down and gold goes up. So that's something you should keep in mind. If the stocks keep on going higher, then probably gold is sold, but you never know. So at the moment, I don't know. I don't have a view on what's likely to happen with gold. If it hits resistance around here, if it starts to roll over, basically meaning that the price hits this level or area, I should say rather, and then it starts to sell off. Excuse me. Excuse me. Oh my. Sorry guys. Yeah, I'm back here now. Yeah, if it starts to sell off, then obviously I need to ask the question how far it might go. And the answer might be that it runs down to this support here. So that there could be a short trade there. Yeah, but I need to see the price action. Always, always, always I need to see the price action confirming the idea. Then I have, the second question is going to be, what happens next? What happens when the price comes down here? Is it going to move higher? In which case we could have yet another higher low. See this. If I move this a bit, I'm going to make it just a trend line. Then we would have a higher low there, and this would be yet another higher low. Obviously, you never know with markets. It could bounce from there, it could move all the way down here and then bounce. Just be ready for anything and everything and never assume beforehand what's going to happen. Just make these scenarios in your mind and then see what the price does. And then you are more prepared to trade the market when you actually see one of your scenarios to work out. So that's basically, that's highly important to me at least. Then there's one more scenario, obviously, that the price just keeps on dropping lower. The stocks go higher and the gold goes down. But yeah, then I say that it would be probable that we move all the way down to this low. But yeah, let's see. We are seeing some hesitation here at the moment. We are seeing the market reacting to this combination of 61.8 Fibonacci retracement and the channel high. So let's see. If the market breaks higher, it's probably going to go to this high at 1941 or so. But again, always follow the price action. Never ever trade something that you want to see or assume that the market is going to do. Okay, so it's getting late. I'm trying to squeeze in a couple of other markets still. Let me see. I think New Zealand USD is interesting because it kind of goes with this theme. Let me see if I can find it. I thought I had it ready, but I don't. So New Zealand USD, there we are. Okay, that's daily. Let's go to 30 minutes. And I'm going to squeeze in a bit so that I can have a better view of what's been going on. The market rallied just like gold. It rallied, sorry, just like oil, rallied really strongly, then moved sideways, then another rally. So that has created some support resistance levels. Let's go here. I'm going to make this level by copying the values. Okay, so we have a level that used to be resistance, so that's now likely to be a support. And I have to say, quite often these areas or levels, they really are not levels, they are more like areas. Here you can see how the price came down to it and it fluctuated about it and again and then moved higher. So don't expect these levels to hold as such as levels. We just tend to talk about them as levels. But yeah, so market might move slightly below, and it's often a good idea to look at different highs that the market has found difficult to move through. So it's probably going to be one of these levels, or one maybe the area between that the market bounces from if it moves down here. Then it's quite clear that this market has upside momentum and it's going through this sideways phase where the market is looking a little weak, but these supports are not very far. So I think it makes sense to look for long trades still in this market. And like I said before, when the market is at support, we should look for long trades. So if the market moves down here to this low and bounces higher from it, that's sign of strength. If the market rallies above the latest high here and stays there, for instance, if it does something like this, it retraces a little bit, comes down to that support, and then moves higher again. I mean, that's a sign of strength, and that's something that you should look for. We don't know beforehand what the market is going to do, but these are potential excuse me, these are potential buy levels. If the market just keeps on going lower and breaking supports, then we have to prepare for maybe to let it go and look for buy opportunities lower. Maybe it goes all the way down to this high or this high, we don't know, but we just have to see when it goes there, if it bounces from those levels, and then act accordingly. Keketso is asking, what is your take on correlation trading? I don't know what you mean by correlation. If you mean copy trading, maybe you can help me to understand the terminology you are using here. But if you are referring to copy trading, I would say be very careful. Be very, very, very careful, because I've seen a lot of bad stuff over the years. Whenever you don't have the control of your own trading, and that's when I would say it's a no-no. And if you want to try somebody else managing your money or copy trading, I would say do it with a very small amount. Something that really doesn't matter if you lose it or not. Correlation trading, or do you mean correlation trading? Like where you have two markets that are highly correlated, and then you look for trading opportunities based on the correlation. There's many ways of doing that. But basically, what we did here with New Zealand USD and oil, we're kind of using correlation as one of the, it's one of the factors that play in here. As you can see, oil rallies higher, retraces a little. Sorry, oil rallies higher, retraces, rallies, retraces. And because New Zealand USD is a commodity currency pair, we're seeing something similar. Not exactly the same, but something similar. The market moves higher, retraces, moves higher, retraces. So these two markets are correlated, meaning that when one moves higher, the other moves higher too. But you need to remember something. If the market, the correlations, let me put it this way, correlations are not hard and fast, something that never changes. Correlations change over time. There used to be very strong inverse relation with oil and with gold and stocks, and then it disappeared, and then it came back, then it disappeared. It keeps on switching, it keeps on coming back and going away. You have to be aware of this, and you can't always say that if the gold is going to go down, then the stocks are going to go higher. It's just not the way it works. I think the way I would like to wrap this up today is that always look for price action confirming your trade ideas. Let's take an example here. We have market finding support. There's equal lows, so it's a double bottom. Okay, that is one factor. It tells you that the market isn't willing to go any lower. yes, there was a series of lower highs, but then that series kind of got disrupted. Market came to a level, met some buying, there was buying again, and then the market broke out of this this bearish trend channel. So you had another technical factor. And the third factor was that the overall market was trending higher. So that was factor 1, then double bottom, factor 2, and then break above the channel high, factor 3. And then the market rocketed higher. That's an example of price action analysis. It's telling you that basically the market is not willing to move lower, and it makes sense to look for long trades. Okay, thank you guys. It's been about an hour that we've had an opportunity to spend here together, and I would love to hear your opinions on the webinar. Just if it was good and helpful, you can tell me on a scale 1 to 5, or if you think it was not so good, you can tell me on scale 1 to 5. So 1 is not so good, 5 is great. Let me know what you think, so I can basically learn in the future how to develop these webinars. And if you have any further questions, you can always ask in the chat, or you can send an email to our support, and these people are more than happy to help you. Millicent is thank you, very good. I take that as 5. Or if you want to give me 4 or 3, that's fine also. Just let me know, Millicent. Is it what number is it? And Kanyasai is giving me 5. Thank you. Again, I'm not asking you to give me 5s, but if you feel it was good, you are free to do so. John is giving me 5, Millicent 5, Samantha is giving me 44, or is it 4.4? Oh, Faye is saying very excellent, 10. Oh, thank you. I'm honored that you guys take some time off from your other activities and come to my webinars. It's really something that I treat with, I value the fact that you come. I value you guys. So I'm very happy that I was able to help you. Oh, John is saying I am equally grateful. Okay, thank you. Excellent. Hey guys, I'm going to wrap this up now, and once again remind you that this was not investment advice, and this was made available so that you can learn to become better in your analysis. And I look forward to seeing you again in the next webinar. I'm gonna be off for a week or so, but after that I'll be back on from 4th of April, and you can read my analysis again. Hey, thank you for the webinar. It was absolutely a pleasure to be here with you, and I hope that you trade safe. Take care now. Bye.